Hello everybody and welcome back to another Crypto Jet video where today we're going to be talking about Stellar or XLM. Now we're going to get right to it, but if you enjoy my content, please do not hesitate to leave a like, comment down below, ask me a question and subscribe to the channel. Let's move on. Sitting at a price of around $0.50 at the moment, market cap $11 billion, volume of over $1.5 billion, fell quite drastically since yesterday, and a circulating supply of around $22 billion. Max supply is capped at 50 billion. Now, what exactly is Stellar? Stellar is a payment network very similar to Ripple that tries to allow for a global and widespread use of currency that can be used to perform fast transactions with very low transaction costs. So they're one of the most promising projects on the blockchain network that focus primarily on payments and enabling of payments using cryptocurrencies. The XLM developer team, they're at it since 2014 and have only one goal, which is to make money move as efficiently as an email does. Just imagine that you click send, it sends, you pay almost nothing. I'll talk about the fees in a second. So they're very fast, they're very secure, and their goal is to enable cross-border payments in an instant. The network can also be used to create your own tokens. So you have Stellar Lumens, you have Stellar, which is the network for providing these transactions, and you have Lumens, which is actually the currency which is used to pay for different stuff. Now, the network allows you to create your own tokens as well in case you want to create a digital sort of economy or environment. Now, instead of using the traditional proof of work system, Stellar uses their own Stellar Consensus Protocol or SCP. It's pretty much the same thing, but a little bit different. And one of the main selling points of Stellar or XLM is their 3 to 5 second very high speed transaction times, whereas Ethereum, for example, takes 15 minutes and they cost $0.01 per every 300,000 transactions. Whereas Ethereum costs $0.02 per transaction. Now, let's talk a little bit about why do they require lumens? What are lumens? Lumens are the actual currency used on the network. Their whole intent is to be a fast, efficient payment system. How do they do this? How do they keep up with what people want? And how do they keep people in the actual system? They do it by making the minimal requirement for holding their token. Their minimum balance is 1 lumen, and the minimum per transaction fee is 0.00001 lumen. So they do this to encourage people to actually hold the coin and discourage large-scale bad behavior, which is what people would do if they actually could hold no coins, or, well, they certainly have an idea about it better than I do. Their idea is to create a currency that is independent of economic and political factors, such as all the other currencies that exist currently. You can see Forex, all the main pairs that exist, Euro, USD, GBP, all of these currencies. Everything is basically a representation of how well the economies are doing. Now, lumens aren't minted, they're not mined, they're not awarded by the protocol. Instead, the supply of lumens was configured to add a certain percentage every year since their release. Currently, there's about 50 billion lumens because in 2019 there was actually a vote saying that people didn't want the economy to keep growing. They didn't want inflation to keep so they didn't want the supply of lumen coins to be infinite. They actually wanted to cap it, and they halved the size of the network. So there's currently 50 billion lumens, and no more will ever be created. This is very good. It's creating a sort of scarcity for the system. Where can you get this coin? You can buy it on Coinbase, Kraken. You can buy it on Binance, and also their native Stellar exchange or Lobster, which allows you to directly purchase them on the network. Now, lumens will always have utility in the Stellar network. However, their pair to USD or Euro or whatever can obviously lose value or increase in value. So they're just pointing out how risky actually cryptocurrencies are. Risk, volatility, all of these are factors that are affecting every single coin on the market, because cryptocurrency, even at its stage right now, is not even near global adoption. So speculation will be at a high. We're going to take a look at the technicals very quickly, so I'll be right back. So let's do a quick rundown of the technicals. I'm going to show you a few important things. Now, the first thing that I do every time I try to examine a chart is plot out the important support / resistance levels. This is one of them that I can see from the past around the 20-cent mark. We can see the price going up, boom, bouncing down below it, up, boom, selling pressure, bouncing down below it, after which we've created this sort of a double bottom setup and the price skyrocketed into this next level of resistance, where we have also experienced strong selling pressure, boom, bounce from below it, bounce from this level of support. Now, you can see how the price is actually playing and consolidating between these two zones. There's always going to be a break of these levels of support and resistance. The more times it hits a level, the more likely it's actually to break. So, another level that I see is this one right about here, where we saw the previous all-time high level and sort of a consolidation of price right here. Now, this ties into something that's happened in the past around the 21st February. I want to let you know how I would actually take a trade back in the day, because trend lines are quite important and trend breaks even more important. So if you go into the lower time frame, you can sort of pinpoint your trade to be a little bit more precise, your trend lines, your zones, everything that's happening. So right here you can see a consolidation in this sort of area, a few hits off this level of resistance up here, one more right here, indicating very strong resistance and possibly a push downwards, a correction, because the coin actually reached its all-time high. Now you can see you can actually take this trend line as a level of support down below, and the moment it breaks it, you can take it as a signal that the price will keep going down. That's exactly what happened with this candle. As you can see, a very long wick on the top, meaning strong selling rejection, and the next candle, which closed in quite a bearish manner, and especially this one, which actually went down tremendously in the same day. However, there was buying pressure to lift it up, consolidate for a second, and then plow through into this zone of support. So take your trend lines. When you can notice something like that, don't miss it out, because it can provide a very nice sort of short opportunity. Now, what we can see here in the present day, I can see this coin following two different scenarios in the following months. Now, I can plot another zone right here, quite an important one, because the price actually did see, hit it once, consolidated between right here, hit it once again almost, hit it once here, but from the bottom, so it's acting as a support. So there's two ways to trade this coin. Now, people who trade futures, you will learn about this soon. You're able to set long positions and you're able to set short positions as well. Short means you're betting that the market will actually go down. Now, how can traders benefit from this? For example, if you're a short trader and you are waiting for the price to go below this zone of support. Now, if the price goes below, the very likely scenario is that it actually goes below, retraces back into this level, and then continues going down into the next level of support or resistance. A short trader could benefit from this move greatly by setting a short position, a limit sell order when the price comes down to this area, so it's executed when the retracement sort of happens, and waits for a move downwards. That's just one type of trade that could be made. Another type of trade is breakout traders, who could wait for the price to actually break out of this level of resistance up here, retrace back into the level, use a limit buy order, and wait for the price to keep going higher up. This is a very likely scenario for this coin. I would take it because we can see strong bullish pressure. This candle is massive. We do see some indecision in the market and the retracement. However, taking our Fibonacci retracement tool and plotting it from here to about sorry, I plotted it from the wrong area. You should do it from the bottom of the actual thing. We can see the Fib retracement actually sort of coinciding with this level of support down here, meaning that the extent of the retracement after this bullish move was actually a healthy one. Now, what I see this coin doing is definitely going for a new all-time high in the next weeks and going towards the dollar mark by the next few months, end of the year, whenever. The project is amazing. Remember, very fast transactions, very low transaction fees, $0.01 per every 300,000 transactions. Just try to imagine that when you're sending money somewhere, using a bank and paying $75 to send a wire transfer from one country to another. So keep this in mind. Trade on, boys. I hope you find success and more green days in your trading routines, and I will see you all in the next one. Adios.